Well, hi, everyone, and welcome to the Buffett and Beyond ETF report, and this is June 8th, 2024. And folks, we have new highs in the QQQs, which is the NASDAQ 100, and we have a buy signal to go along with it, and I'll show you that in a second. Meanwhile, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's go to the QQQs, and here we have the new highs in here. And we do expect it to come down and test this line, but that'll be next week. And right now up here, we thought we were going to get a sell signal this morning, but evidently not. And then when we come all the way down here, we have a buy signal in here, folks. This black line has crossed over the red line, and I'm recording this about an hour and a half before the market closes on Friday. And as long as this stays up, as long as this index stays up for today, then we will have that buy signal taking into next week. And don't forget, the Fed meets next Tuesday and Wednesday, and then Wednesday at 2:30, Fed Chief Chairman Powell comes out and he tells us what he thinks, or he will be asked questions about what he thinks interest rates are going to do. Don't forget, Canada and the European community has dropped interest rates by 1/4 of a point just the other day. Now let's look at the S&P 500, new high in the S&P 500, same type of signal up here, and guess what, down here, the same type of buy signal. Again, the market has not closed today, but if it closes where it is right now, and that'll be about an hour and a half from now, then this signal will be a buy signal. Now let's go to the transportation. And the transportation, even though it was doing terrible as it comes down, and don't forget, the transportation tells us whether goods are being shipped around. And if the raw materials are being shipped to the producers of goods, or the manufacturers of goods, and then those goods have to be shipped out to the stores so that we can buy them. So the transportation average is a leading indicator, and we see that it fell, came below this 200-day moving average, and now has popped above it, and also this green line, which is a 20-day moving average. And we have this little buy signal in here. So we'll see what happens. Also down here, we have a buy signal. So we're starting to see buy signals, especially because of the rally on Thursday, and also Wednesday was the big rally. So we're seeing a lot of good signs in these stocks here right now, folks. And when we look at the home builders, we see the home builders, which we expect to do well. First of all, we have a buy signal up here, and that buy signal has not been violated even though the market has been coming down, or the XHB, which is the home builders ETF, has come down. And you can see that this is going to be critical next week, because we want to see if this makes a double bottom. If so, we are golden, folks. We can just get fully invested and go play for the rest of the summer. Down here, though, we still have that sell signal, but this home builders ETF is now oversold again, and we're looking at this double bottom in here, just as we are in here. In fact, right now, if this could turn up, we would get a buy signal, because this low will be lower than this low, but we have to see, and that'll happen this coming week, along with the Fed meeting Tuesday and Wednesday. So let's go to the home builders, and we're looking at the S&P 500 up 12.2%, home builders up 13.4%. Now last year, for 2023, this same portfolio was up 56%. And here it is up again, outperforming the S&P 500 by a little bit, but at about 13.4% to 12.2% for the S&P 500. Now, let us look at my favorite portfolio, and it's the NASDAQ 100. And we took Tesla out of this portfolio, and therefore it's stuck at a negative 33.5%. We just have to keep that in there. We did not replace it with any stock yet. So we're looking at this portfolio returning 27.2%, even with that big loss in Tesla. So 27.2% is more than double the S&P 500 and double the QQQs themselves, because a lot of you say, let me push a button and buy the NASDAQ 100. Yeah, but if you buy the best stocks in the NASDAQ 100, you're up double that. And if you hedged, if you hedged 30%, you're even up 15.5%, which is more than the S&P 500. Now, what did this portfolio return last year? You're not going to guess. You're never going to guess what it was. This portfolio with these exact same stocks in it were up 97.9%. And here we are up this year, 27.2%. And that's even with the loss in Tesla this year of 33.5%, where we sold it. The stock is higher than that right now, which means this loss would be lower, but we have to keep it at this loss because that's when we sold it, and we sold it in the other portfolios too. So the QQQs, and again, this is my favorite portfolio, and I certainly don't mind hedging this when we time it. So in other words, when the market goes up and our signals are going up, we get out of our hedges. When the market signals that it's going down, a downward trend, then we get into the timing of the signals. But this is 30%. We hedge 30%, but since this is a 3-for-1, the SQQQs, 3-for-1, we can use, and they call it an inverse ETF, and the inverse ETFs were invented for IRAs. So you can see we can use it for hedging. So we can use 10% of our portfolio and buy the hedges, but timing them, and we would be up 23% so far this year. Not bad, folks. So that's the QQQ, my favorite portfolio, or I should say the top stocks in the QQQs, along with hedging, and the hedging of 30% when we do hedge, and we'd be up 23%, and we'd be 30% hedged several times this year already when the market goes down. So folks, we had a pretty good week this week. It was a little scary during the week. It was up, or it was down, it was up. And finally, we're getting some good news because overseas, the European community and Canada have lowered their interest rates by a quarter of a point. And that means the Fed is maybe thinking about lowering interest rates. However, numbers that came out this morning about the labor market, we are still creating jobs. Our economy is good. So if our economy is good at this present interest rate, we might as well be fully invested in stocks. And to stay fully invested in stocks, and if we think the market's going down or we get the signals that it is, then we get into the inverse ETFs. So folks, you go out this weekend, you have a fine weekend, stay safe, be with your loved ones, and folks, we'll see you right back here on Monday.